This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Okay, so it's 7 o'clock BST. Hello, good evening everybody, and welcome to this special open Q&A with Paul Johnson, the CEO of Power Metal Resources, hosted today by Stockbox. I'm Mark Fairbairn and I'm the Director of Content at Stockbox, and I'll be hosting the session tonight along with the Telegram admin in the background, controlling the chat, keeping things in order. So the format of this evening is to start with the questions already received so far. So thank you to everyone who has sent their questions in already. I'll put them to Paul and he will answer them live. We've then set aside 30 minutes or so for this, and we'll see how we get on with time. But following this, we will open up the chat for any further questions or points anyone would like to put to Paul directly. This can be done by either typing your question in the main Telegram group, or you can ask it live in this chat, and we'll get to that later on, how that will work. The admin may mute the chat from time to time just to keep things orderly, but regardless, we will endeavour to get through and answer as many questions as there are, because that is what tonight is all about. So welcome, everybody. Let's crack on. Welcome, Mr. Paul Johnson. Are you good to go?
I'm good to go, Mr. Mark Fairbairn.
Thank you very much, Paul. Thank you very much for your time this evening. So, in no particular order, I will ask you some questions that have been sent in already. And the first one is there still value generated by having Power listed on the Aqueous exchange? Is there any possibility of moving the listing to an exchange such as the OTCQB for greater international interest, perhaps?
Okay, so we're not actually listed on the Aqueous exchange. What you see on Aqueous is that we have the market makers sometimes put the trades through Aqueous, and it's a secondary market trading facility for them. So we don't choose it, they just use it. And they use it because it's a little bit cheaper, I think, to put certain trades through there. The question of the OTCQB, we are already looking into this, you'll be pleased to know. A number of companies have tried this in the States, and sometimes it works. It gives another avenue to additional investors. I appreciate that. It doesn't expose you to the regulatory risk of having a full-on listing in the States. There is a cost attaching to it, but it's modest. The one thing that's absolutely key is that if you're going to put yourself onto that kind of trading facility, you need to make sure you have proper marketing and communications that reach out to that audience. And we're looking into all these different features at the moment, but I would expect that that form of trading facility will be established in the not too distant future.
Okay, perfect. Thank you, Paul. So the next question I've got is there a time frame for replacing Andrew Bell as chairman, and has there been any notable interest in his position to date? Brackets, thinking it would be nice to see Gervais Heddle in the role.
Okay, so the traditional thought with this is that you are expected to crack on with putting in a replacement chairman, if that's the right phrase. You do have a period of time. The exchange recognises that it's a significant position in your business, so it doesn't have to be immediate. But they, generally speaking, you would be looking to do that within, a few months, and that's, shall we say, certainly our intention. I couldn't be specific on individuals; that would be a bit unfair and put me into lots of trouble. I know there are some directors or potential directors who are better than others, and that the market will respect. I think having a person as chairman in our business that has, a good history, that has an evident level of capability, and can help the team as it stands to drive us to the next level in our growth and development is absolutely vital. So it will be a strong person that comes into this role.
Okay, good to hear. Now, are Paul and the team happy with the extensive diversity of the resource discoveries that are now being pursued across the company? Or are there any mineral types that are seen as value accretive that are not currently in the portfolio base? And sort of the brackets is graphite is the only mineral I can think of.
Okay. So I used to be on the board of Armadale Capital. Obviously, graphite was the focus there. We have 3 continent operations. We have 13 projects. We have 9 commodities covered. So ostensibly, yes, we're happy with that diversity. Absolutely. Would we refuse something that was an absolute fabulous addition, made sense within the portfolio for a variety of reasons? Not necessarily. We're looking all the time. Our model has been a prospect generator, effectively, and then not just sitting with those prospects on our books, but doing something with them, either ground exploration or thinking about corporatizing, packages and looking at spin-outs, IPOs or disposals. So we will have, as time goes on, a portfolio that shrinks in size as projects are put out into their own listings or disposed. And that will mean that we'll be looking for new opportunities to come in. So we don't shut off that pipeline review. We keep it going all the time. There are some tremendous opportunities out there. I am aware that the market has a lack of patience in difficult conditions to new opportunities being taken on board. There is a concern over whether you have the managerial time or, more significantly, the working capital to sustain an ever-increasing portfolio base. We have a very tight financial model that enables us to be very careful and controlled in terms of how much we spend. So any new opportunities coming in would have to have big impact and big significance in the portfolio, but they would not overstretch us. So I'd say we are perfectly happy, but we are open-minded.
Open-minded. Okay. If the right opportunity presents itself. Okay. Good.
Yeah.
Now, has there been any more results from the Ditau project since the 2nd of July? The RNS stated that there will be drilling by end of the year in priority ring targets, but also said that surveys will be completed on 5 remaining ring structures.
Okay. Yeah. So we're in that area that's a little bit grey, and I have to be careful. Yes, of course, there has been progress. And our partners with regard to Ditau, Kavango Resources, are not hanging around much at the moment. They're cracking on with things, and we share that view that we want to get on with the work. But most importantly, we want to communicate what's happening to market. So you can bet for sure that there will be an update on what's happening there. And that update will provide a really detailed position as to where that project is and what our plans are. We're very excited about Ditau. It's been a project I've been following for years. It's the reason why I originally got into Kavango in the first place as an investor, and I guess it's the reason why ultimately we did the joint venture deal with them back in 2020. So I'm quite excited for the market to see the plans there, and what that could mean for both of our businesses in the not too distant future.
Okay. Now, I've got 2 questions here that are relating to the IPOs and the spin-offs. So the first one is, it's clear from recent interviews that Paul is pleased the spin-offs haven't listed yet due to the depressed market in the junior resources space. He anticipated an improvement by the time we were listing the first, maybe by the end of the year. So what if the market stays depressed? Does POW sit on its hands and hold back on the IPO until conditions improve? And second question, a liquidity event in one of the vogue resource investments at the moment could be very convenient timing for POW. Is Paul watching developments elsewhere with a view to timing the power IPOs? So it's about timing on the IPOs, isn't it?
Okay, those are great questions because they're difficult to answer, which is what we're all about tonight, I think. In terms of if conditions continue to be depressed, and I don't expect this, because as that famous saying goes, the darkest of the night is just before the dawn. I see levels of sentiment at abysmal levels, really, and people are really finding it hard to stay in the sector, to keep the confidence levels up, and so on. All the conditions from a contrarian perspective you would want to see if the market is about to turn around in our space. So I'm optimistic for the coming months. I'm optimistic for the end of the year and for early next year, which is the target zone, as it were, for these spin-out IPOs, or the first batch. Now, In terms of will a depressed market, should it continue, delay us? Well, yes, by very nature it would do, because an IPO process has a number of different elements. And one of the most important is the ability to raise the IPO finance. So once you've done all the preparations and you've got the approvals from the exchanges to list, then you have to go out and you raise, a reasonable amount of money from general investors for that IPO vehicle. And then once you've done that, it comes on the market with that funding to pay for its operations. Now, if the market is desperately depressed, then the access to capital is weakened. Now, you've got two choices at that point. Either you say, one, okay, we'll drop the price and try and get the money in through a discounted offer. I don't like that approach. Our packages that we're putting out are going to be, I think, best in class. I think they're going to be leading vehicles in our market. I don't want to do discounted IPO finances for those vehicles. So I would be very reluctant to go down that route. The other alternative is that you simply have to wait for better market conditions if that transpires, so that you can protect the value of that vehicle. And that, I suspect, is what most sensible IPO management teams would do. They would wait for the market to come to them if it's a particularly abysmal phase. There's no point trying to push something that's not wanted at that time. Our market is very cyclical. It comes and goes in terms of popularity, sentiment to positivity. It swings around from positive to negative. And sometimes just a little bit of waiting can be the solution. So that, I would say, yes, there is a plausible argument that if the market conditions were terrible, you would wait a little bit. Now, would a liquidity event in one of the Vogue resource investments, I'd love to know what those Vogue resource investments were, although I suspect I might know 2 or 3 of them. Yes, I mean, that's very sensible. It's not beyond too much comprehension that back in 2019, Eurasia Mining had a major run up in its share price, and that major run up in its share price enabled us to raise some capital in POW back in December 2019, because people had made quite a bit of money off the back of Eurasia. So these events sometimes are linked. Would I scout around specifically waiting for something to happen before pouncing? Well, I'm not quite that desperate. But, having a good awareness of the market, liquidity, its strength, its appetite with regard to finance is an important business skill to have. And we have exposure, connections, contacts across the marketplace to enable us to pick up any useful information that could help us in the process.
Okay. So IPO is progressing, but timelines are perhaps a little bit fluid, just depending on market conditions.
Well, sort of. No, I just assume that we're going to push ahead because, generally now, if you were launching an IPO process, 3-4 months ago, and you listed in this set of market conditions, then it would be really tough. And we may be on delays, as it were, subject to finance environments. I suspect with our packages, we'd still be able to raise. I mean, look at a couple of them that we're dealing with in POW. We've got the Golden Metal Resources, which has got strategic projects in Nevada. Very, very kind of positive package, including, subject to due diligence, the Pilot Mountain project. That back in 2016, when I was on the board of Thor Mining, was the primary reason why the price of Thor drove up 10 times over a year or so, because of that strategic asset. So, it's a nice, attractive package. There's money out there for good opportunities. And I think IPOs, if you're looking at, significant high net worth investors, you're looking at institutional support, that kind of thing. Good propositions entering the market for the first time do tend to be the source, the focus for those investing groups. So I'm pretty confident that we'll be able to get these things away. But as we said before, if the conditions were so perilously bad that it was difficult to almost raise money at any price, we would pause.
Okay, good. So the next question I have is regarding something that I think was in an RNS in the summer, and it says, I've taken this quote from the RNS 30th of June 21, and it's noted that Power Metal has set up Power Capital Investments Limited, Power Capital, a new 100% owned resource project incubator subsidiary announced on the 4th of May. And this was formed to provide a means to continue engagement with smaller but potentially valuable resource opportunities. And the question is, what's happening with this?
Yeah. Okay. So it was meant to be our incubator business. Well, it is our incubator business. We're looking down the line with that primarily, I would say, because as the finance and the confidence comes back into our space, many projects will access capital easily. And we were thinking there is one group of project holders that would not necessarily get that capital immediately, and they might have to wait 2 or 3 years. And that was the prospectors, individual people, and also the very small organizations. And we could open up to that group by having this in this vehicle, Power Capital Investments. Well, it's worked, and it's worked a little bit quicker than we thought, to be honest, because we have a variety of different things that we're looking at. Now, somebody asked me before we put the quarterly report out if I could give a bit more information on it. And the answer is, generally speaking, we don't want to. We want to just develop opportunities quietly in the background until they become significant in our eyes. And then we move them into the Power portfolio, or we move them into a spin out mode, if that's appropriate. But I didn't want to leave it there. So we put in a couple of examples, and we talked about gold, European gold. And we talked about African rare earths. And there are other things as well that we've been looking at and are looking at and engaging with. All these different opportunities we will take through a formal process. We'll have contracts, we'll have agreements in place to make sure that the amount of money we have to spend is controlled. So, we know what the money is being spent on. It's in stages, so it's broken down into different chunks for different performance criteria, and also so that we have a clear route to a shareholding, if that's appropriate, or a project interest, if that's appropriate. So there's a little bit of a flavour in the quarterly report, but it certainly doesn't express the full extent of what we're doing.
Okay. Now then, the next question I have here, it's interesting that they say that there are 3 early stage projects, namely, and then go on to list 2 of them. So what's project number 3?
Paul, that's a cracking spot.
Yeah.
That's a cracking spot. I think generally speaking, most RNS or RNS reach or public communications have errors in them. And it's interesting when people spot them. And we do try and eliminate all the errors, but we can't be absolutely perfect.
Okay. Good.
Oh, yeah, there is a third, but it didn't go into the quarterly, and there's more than a third in that sense. So it was just a bit of an error in terms of what we put in.
Okay, fair enough. Glad we've cleared that one up.
Thank you.
So now we have a couple of questions which are regarding the warrant position. They're very similar questions, but the first one is companies are quick to state X amount of money is due from warrants over the next few years, but seem very shy to provide a breakdown to shareholders of how many at each price and the strike date. Maybe if Paul could include it in the next quarterly update, then a biannual update would suffice. And the second question was, we'd all like to see the current outstanding warrant position in detail. So, yeah, can you give anything on that side of things, Paul?
Yeah. Okay. It's funny actually, because some companies say we've got X amount of warrants in the money, and that's part of our financing strategy. Fair enough. And people see that as a positive. On the other side, people say, oh, there's X amount of warrants in the money, and that's an overhang. And you're never entirely sure where you are with this. I think pulling this in the quarterly report is a great idea. So subject to obviously regulatory approval that I can state this, I will do it in the next quarterly report at the end of December. There's no kind of shyness about it in that sense. The financing a business has over the last 3 years has been quite difficult, and we've been able to draw in off financings themselves 2.7 million over 3 financings in Feb 19, December 19, and July 20. We haven't done any since, because we've had warrant money come into the business. We've made material, significant investment returns, and management of working capital has been quite tight. So we've kept our business in the 2+ million kind of bracket on working capital, which is absolutely great to achieve our business objectives. Now, I don't think for for 1 second that we're super rich as a business. I think we're in a strong financial position, and we have remained pretty much entirely through our existence compared to our required budget plans and future cash forecast outlays. But yes, we'll put that information in the quarterly, and in terms of putting these instruments on the website, then I would actually like to put everything on the website. Once it goes on the website, we have to, first of all, it has to be absolutely precise, and secondly, we have to keep it thoroughly updated because capital structure is something that you really need to sit on top of. And as people will hopefully realise that we put information on the website, we certainly do look at updating it regularly. For example, the AIM Rule 26 page and the corporate presentation we do on a regular basis. Now it's every month, basically, we update these things. So thank you for that point. It's well noted. You'll be pleased to know that a substantial proportion of the original financing warrants that we had in issue have already been exercised. The balance of warrants compared to where we started is quite modest, and I think as the sector kicks with a bit more life, that they will likely be cleared out quite quickly. I do have control over the December 21 expiry warrants, but we've chosen not to exercise that acceleration provision that we have now because it achieves a certain price target, because it's better to let these things come in smoothly over a period of time.
Okay. Well, the next question I have, Paul, is it's likely that we will need substantially more buying volume to get the share price up. I think this usually comes through institutions and big investors buying, who will also help to stabilize the share price. Does Paul think that private investors, who he is generally addressing in his communications, have the appetite or capacity to drive the volume required, or what needs to change to get investors on board?
Okay, so I think it's important to mention that there have been a number of notable stock successes, including Greatland Gold, that have been driven on the back of largely private investors. In fact, I can't be certain of this, but I think Greatland Gold never did an institutional financing or anything like that during its big run-up phase. It was done off the back of high net worth PCBs and general investors buying on the market. Although there did seem to be some larger parties start to get involved, of course, as we've seen, as the move got a little bit more established. I think private investors have the ability to drive a stock dramatically higher. Yes, I think it's your safest pool of capital, if I'm honest. If you're looking at a medium to long-term approach on your business, it's a smoother form of capital. Institutional money can be very valuable, but you need to go to the right sources for it. We're engaging with institutions right now with regard to our IPO vehicles and also with regard to the general power business. It's something that we need to do now because we don't want to wait until our market cap gets up to a high level and then start the process. We need to build those relationships at this stage, which is what we're doing, and we have some people working with us on that to build those relationships. I don't think you will generally, I could be wrong, but I'm not seeing in my personal experience institutions heavily buying on the market. It's just not what they do. They may participate in direct financings, but again, if you do that, you need the right institutions with the right investment ethos and methodology to protect your current investors. You don't want large positions being flung around in and out in the stock, causing pain and hardship along the way.
Okay. And a sort of follow-on to that question is: does the wide project diversification make this difficult for their investment allocation? Though conversely, it's good for PIs who have a ready-made bundle of projects. Does POW need to be seen as a holding company rather than an explorer to be taken seriously by large investors?
Oh, that's probably five, 6 questions in one, and it's a good point. We made a decision to try and build a different company, to be a company that was not the norm. So not 1, 2, 3 projects, not underfinanced, not driven by board compensation, that was actually looking to aggressively build its portfolio, to build its financial strength, and to invest heavily in exploration. Now, the engine of growth in a business such as POW is, of course, the exploration discovery. To achieve that, we have to explore, which we're doing across multiple projects simultaneously. And you see the results of that. For example, the drill campaign that's underway in the Tati greenstone belt in Botswana, where we've got gold nickel targets. You see that with the work at the OTA North lithium project in Quebec, where we've just done the soil sampling program on the ground. You see that with Silver Peak, where we recently drilled and we're waiting the assay results from that. And there's a whole variety of other, programs that are underway at the moment, and results expected from either programs completed or programs underway. And it's the discovery that will make us as a business, and it's the discovery that's the focus and the core of our business operations. The spin-out IPO disposal route can generate large lumps of working capital that we believe, in the case of IPOs on the market, will grow materially post-listing and increase our working capital. If we put a vehicle on the market, say, where we have a stake of, let's just pick a figure, £3.5 million, and that vehicle trebles on the market post-listing, then we have £10.5 million. If we do that 4, 5, 6 times, and I'm optimistic we can do that more over the coming years, we end up with a dramatic working capital position to the point where we will not be under threat of running out of capital. We will be able to, if we wanted to, raise capital at significantly higher levels. And, when you want money, if you want money on the market, then generally speaking, it's difficult to get it. When you don't need money on the market, they throw the stuff at you. And so building a position of financial strength is very important. And that's the engine of the exploration, having that strength of financing capability. Because it's not just sticking a few holes in the ground to see if you get lucky in that sense. It's about having a disciplined program of exploration, building into a drill program or programs to find those major discoveries. The problems start when you get the discovery, in many cases, because that's the point when you have to think about really ramping up your investment into a project. Now, a lot of the time you can expect the share price to rise significantly. And then you can raise at high levels, and then you can carry on with your work. And that's the traditional model. But I'm an accountant. I've spent my life in risk management. I want to be belt and braces on this. So I want to build our working capital as the business grows and develops so that we can stand our ground. And I can say to our investors, at no point will we go cap in hand to the market, desperately asking them to give us some money to stay alive.
Okay, good. Well, I'm on to the last question now that was pre-submitted, which is good. We're good for time, so we will get ready to open the group for live questions. So people listening, if you have any questions, get ready. And this last one, I quite like this last question. It's a good one to finish on, Paul. And it's, once POW has several spin-outs on their books, how will Paul communicate the value of the company? For example, NAV of shares on balance sheet under reflects exploration potential.
Oh, okay. So are we going to go down the NAV route, net asset value? Yeah, that's the problem. If you go down the NAV route, you're in trouble, because then you become, in the investor's eyes, an investment company. Investment companies are almost never valued at their full investment value. They're usually like a 40% discount. So no, that's not our objective. Don't want to do that. If we had one spin out, that's more of a challenge, because then, if that spin out does really well, then it can kind of compete against our own market valuation. If we have multiple spin outs, then we have a portfolio, and none of them is going to be that significant in the scheme, compared to our market cap. Now, if one of our spin-outs has a major discovery and goes up in value 50 times, it will become disproportionately valuable as part of the portfolio. But of course, at that point, we'll be selling it anyway and building up our cash reserves. So it's a win-win, whichever way it goes. No, our focus, and I would certainly hope by the time we've got several spin-outs on the books, our focus is exploration discoveries, finding major metal deposits. And I suspect that it will be that drives the value of our company rather than the underlying value of our balance sheet. The balance sheet build is to give us security so that we can do better, more extensive exploration across our portfolio of projects that we choose to keep within our own ownership, as it were, or under joint ventures that we're actively participating in. It's not just to build it up so that we become a quasi-investment company.
Okay, fantastic. Well, thank you very much, Paul. And you've done exceptionally well on time there, because we're about 25 seconds away from half past. So that's half an hour there. What we're going to do now, I think the administrator is allowing people to be unmuted. And anyone who would like to ask a question to Paul, there are only 27 people listening, so hopefully it won't be chaotic. Feel free to either shout up or unmute yourself on the Telegram app, just unmute the with the button there. Or if you'd rather type your question in the chat group, then of course you can do that, and I'll ask it. But effectively now, as long as needs be, the floor is open to all the people who are listening to shout up. Well, silence is always a good thing, Paul. It means we've covered.
Oh, hello, Paul. Hi. It's Rob speaking. Perhaps just to follow through on a comment that I made a little bit earlier this afternoon on the Telegram group, that I think that we're not seeing, a proper valuation from the market because of a very wide array of projects, but also that you seem to be trying to progress all of those projects simultaneously. And one might say in some instances, perhaps scratching the surface, rather than getting really into, what is the number one project that you believe could be a significant discovery, and focus the effort and the resource on that, get one delivery under the belt, that, should see the share price, come into strength, and put you in a much better position then in terms of having that behind you going into IPO scenarios and so forth. I just feel that, you've got such a wide portfolio at present that the market really is never going to come to the party on it, mate.
Okay, yeah, that's a good point. We made the decision to go down the portfolio approach, and there is a genuine risk of doing that because you're doing something different. If I look at all the businesses in our lives that have actually achieved something significant and substantial, it's because they did things in a different way. And very much like back in 2016, in the initial discussions I had when we restructured, refinanced Greatland, and I was on the board, and we were having our first major board meeting, looking at the business and deciding what to do. And the easiest way forward at the time was just to plod on and do the same old stuff that had happened before. And the hardest thing to do was to completely change the narrative and the focus and the drive of the business. But, by doing that, we created something quite special. It was other people that did it, coming in with Gervais coming in and driving that company forward. Now, this is a different thing. This is a company that was forged out of a failure. Back in 2018, it was called African Battery Metals, and it was suspended pending financial clarification. We restructured, refinanced in Feb 19, and we had 3 West and Central African projects at the time, and we've moved to 13 projects across 3 continents. We have one of our original projects left in Kasinka in the DRC. We are obviously pushing everything forward. That's been our narrative, actually. Now, do we stop that now? Or should we ever have gone down that route? I remain as convinced today as I've ever been, in fact, far more so than ever before, that we have the right approach. I recognise it's a fight on occasions, particularly in difficult markets, for me to communicate the value and to get people to engage. But if I stopped now, or if I never did this and I decided to focus on one project, I could go out there with early stage projects and do a sampling program. And then I'd have to wait for the results to come back in. And if they were negative, we'd have to stop and then go on to something else, potentially. If they're positive, we would then move to the next stage and do a trenching program and do some geophysics and do X, Y, and Z. And then we'd wait for the results and so on. And that's actually quite a slow way of getting any kind of discovery. What we've been doing across our project portfolio has been doing quite low-cost work. Typically, the invoices I pay are around $20,000, say, for an individual program. Sometimes it's more, sometimes it's less, surprisingly. And then we go and do some work and we get some information out that takes us to the next level, gives us more assurance on the project. And we're doing those simultaneously across multiple projects at the same time. Alongside gathering information on each individual project as we go, we're also satisfying local requirements for spending on each of our projects. So we're making sure we keep them in good standing. And we are, Rob, starting to see certain things emerge in our projects that are really grabbing us. Which is why on the Tarty Goldfields, we've gone hell for leather with that to get the drill program happening just a few months after we did that deal. And it's why, on certain of our projects, as you've seen with the OTA North lithium project up in Quebec, where we've really gone for it fast to get some initial work done on the ground. It's why we want to crack on with Golconda, because we think there's some interesting stuff that's coming out in Nevada. Now, I do think there's a natural point, Rob, where we will get a sufficient level of results where we need to pile in and crack on with things more aggressively. And I think you will see on our exploration portfolio, as those results come in and our confidence increases, that we will start to naturally get going. Sometimes that's slightly slowed by partners if you're in the joint venture situation. And it can be slowed for a whole variety of reasons, whether it be other projects they have, whether it be financial constraints or whatever it may be. We're able to fire up on all of our stuff at any time. But sometimes, for a whole variety of reasons, other people are not. So we might have to pause on certain things along the way. Generally speaking, if we're in control, we crack on, as you've seen with Tarty, and as you've seen with OTA, and as you'll see with other, business interests as we move forward. But I do think you're right. The time is going to come where our focus on exploration does tend to, kind of drill down, if that's the right phrase, onto those projects of greater merit. My only challenge, Rob, actually at this point is I think there's more than one. I think there's more than two. I think there's more than 3 or 4. I think we've got actually a unique and surprising portfolio. And I'm dealing with some cynical people in my business who look at things really harshly. And we're seeing a bubbling excitement with what we're doing.
Okay, thank you, Paul. Rob, do you have any follow-on? Are you happy?
Yeah. Thanks for that, Paul. That's very helpful. And indeed, I mean, I'm very positive about the 13 projects. It was one of the unique aspects of your company that brought me on board as an investor. I think it would just be great to get 1 or 2 big wins under the belt. I think is there also a preferred sequence in terms of getting market recognition? It's a bit like if you get 4 bangs all together, they might kind of overshadow one another. Whereas if you get one success and then followed on within a short period, you maximize the share value from that, the appreciation. Then you get another big win. Then you get another bite at that. Then you get another one sort of several weeks later. I mean, I'm just thinking, is there a sequence that will actually drive better recognition of value in the market than having 4 big bangs at once?
Yeah, that's an absolutely cracking point. I remember when we made the T3 copper discovery at Metal Tiger, and it was kind of I had to deal with the fallout that happened there. Into fallout being the not arguing with people, but the work that cascades in when you make a discovery. And it certainly taught me a lesson about how importance of prepping for these things and putting the team in place before they happen or before the market thinks they've happened. And it is quite difficult once you've got a big success to then get people to look at other things. It's quite tricky, actually. And we had at the time, we had projects in Spain, we had projects in Thailand, we had other things that we were investing in, and it was all the focus was on the copper and Botswana. So that's a very good point. Now, the spin-outs and disposals will help us with that to a degree, because, of course, we're taking parts of the business and putting them into their own vehicles with their own finance and their own management, their own energy and life. And that means that, we won't just have this mega portfolio as we move forward, where people are focused on, 1 or 2 things where we've made discoveries and they're not really focused on anything else. But but we do have to manage it. I suppose it depends on what we find. If we do find a major discovery, then naturally our focus and our energies have to go into that. And I suspect we will then look at a fresh set of business options, including, do we take other parts of our portfolio and accelerate disposal, accelerate spin out, and begin to narrow down and focus on that major discovery and what it means for our business. The other side to this is that we're in an acquisitive market at the moment. There's going to be lots of M&A, well, there already is, but there's going to be a lot more happening in our space. And as we start to find things of interest, we're going to see a lot of engagement from third parties in what we do. We've already seen it. And it's been bubbling over the last 2 years in various projects. We've talked about it at Hennetti, with the nickel there. And we've had interest in Silver Peak, and there's lots of other areas of our business where you're starting to see engagements from some interesting potential partners or acquirers, and we do engage, and that will start to crystallize, I'm sure, as the months and the years go by.
Okay, excellent. Well, I have one other question that was put in the Telegram chat, but does anybody else want to ask Paul a question directly now before I read that one out? Please feel free to speak up. Okay. Maybe not right now. Okay. Well, I'll ask the question that was posted in the group, Paul, and it's regarding the KCB. The rainy season in Botswana is expected to begin in November and December for a few months. How likely is it that any drilling will take place in the near future, given that we're still waiting for the EMP?
Okay, so the EMP is in respect of the Kalahari Copperbelt South Ganzi, and if you just going back, actually, not too long ago, we were drilling at Malopo. I think we started in October 20, and there was a small break for the Christmas season, and then we carried on in 2021. Actually, it was a little bit of a longer break while we did some further analysis, but we carried on in 2021. So it is possible to crack on and to do work. I don't think it's not these environments where literally the rainy season just completely take you out of the process. Rest assured, with regard to drilling, we're going to be doing it as soon as we possibly can.
Okay, thank you, Paul. Well, again, I have a question I'll ask you, Paul. It looks like there are some people typing. There may be some questions coming in. Just regarding the current share price, it's a depressing thing to talk about, maybe, but are you concerned about market sentiment at the moment? Do you think the junior resources generally are struggling, and have you any idea why, and how do you feel about it?
I don't. Pardon me. I've said many times that as CEO of my company, I have a number of responsibilities. One is to take the blame for everything that goes wrong. And that actually includes the share price if it starts to pull back, by the way, even if it might be not in my gift, as it were, to do anything about it for certain periods of time. But I take the blame for everything that goes wrong, and I pass the credit for everything that goes right. And I have a fantastic team. So there's plenty of people I can pass credit on to for all sorts of things that we do. But our market is a cyclical market in the junior resource space. Sometimes it prices things exceptionally well, better than it should do, and sometimes it prices things right, and sometimes it prices things worse than it should do. And at the moment, the junior resource sector is, I think, very, very undervalued generally. Now, I say that because if you look at the precious metal prices at the moment, they're not super high compared to, they have been, a bit stagnant of late, but they're certainly high compared to historical levels, and they maintain that valuation. If you look at the base metals, they're starting to seriously fire up. I mean, big time. And we obviously have a lot of base metal focused projects within our portfolio, as do many junior explorers. Now, if the market was efficient, generally, then given the conditions in the commodities, which is buoyant prices, declining stocks, and a very good forward supply-demand dynamic, then the juniors will be riding high at the moment. The tide would have come in. The boats would have all been floating long since, and they'd be at super premium valuations. Now, we don't have that because the market is inefficient. There's a disconnect between the commodities and the juniors. And in my experience and in the history of mankind and trading stocks of this nature, that disconnect has always closed. Now, it can close by the commodity prices falling, but I don't think we have much potential of that, to be honest, in the foreseeable future with the need for infrastructure around the world, for green energy projects around the world, and simply because the supply of raw materials, commodities has just not been built. There's been supply attrition in the last 2 decades. I think overall we have a great forward profile for our space, but the junior sector has to catch up. Now, if one assumes that the junior sector does indeed catch up, then you've got to look at the portfolio or the number of different junior companies, and London is our own particular market. And you look at those companies and say, which of those companies are driving their business forward, are dealing with, big opportunities, have a good approach to financial management, to business management, to communications management, to corporate and compliance management, and all these factors that make for a successful PLC. And you find the companies that are doing that, and you know that, okay, right now there may be this disconnect at market level where the market in the junior resource sector is not properly valued where it needs to be compared to the buoyant commodity prices. But when it comes good, which it will, then which of the junior companies are going to start to outperform? Now, I've been an investor personally for many, many years, and I've been working on boards of companies for 10 years. And in Power, everything we do has been focused on capturing the good stuff I've seen, over the last 10 years or longer as an investor, and trying to avoid the bad stuff. So I think we have an optimal model at the moment. I think we're doing things differently, and that means we have to communicate what we're doing and keep communicating. But I think we are a real kind of in a prime position. We've bundled up a portfolio of projects. They're not sat as options in our portfolio where we're not doing anything on them. Everything is being moved forward corporately or exploration-wise. And I think as the buoyancy comes back to the market, we will start to outperform. Now, at the moment, we have a lot of people getting in touch with us because they're unhappy about their investment. And they're telling me all the different things that I should do. And sometimes people are right. And they are, the advice that we get, the feedback that we get is helpful to us as a business to understand the things that we can sharpen up on, because we're certainly not perfect. But much of those kind of inquiries stem from the fact that our market price has fallen. And I feel we're paying more than most because I've got the largest shareholding in the company. We've halved since January, despite dramatically building our business. And I can't do much about the market, but I can say that operationally our company is positive, is forward-looking, is quite aggressive. The team are a superb team that work extremely well together. We're starting to produce some incredibly good exploration outcomes. We're starting to communicate that even better than we ever have before. And we've got a growing team base, which is not only able to sustain and build Power Metal, but is also able to staff up and drive the spin-outs that we're creating that you now start to see emerge from our business, which from our perspective includes, of course, gold and metal resources in Nevada, first development resources in the Patterson in Australia. We've recently disposed of our holding in Schreiber Hemlo to First Class Metals that are seeking a listing in London. So it's a quasi third spin out. And obviously we have New Ballarat Gold Corporation, which is the Victoria Goldfields package in Victoria, Australia. So I think I honestly, I take responsibility for our market price. Of course I do. But I can't do much about general market conditions, but I can make sure in-house, in our business, we are doing the very best we can. And I can assure you, because literally every day, that we are building a supremely focused and extremely exciting opportunity.
Good, thank you. And a nice little follow-on from that, which is a good question, actually, I think, is that what's your opinion on crypto, Paul? Do you think that money moving over to crypto trading is a long-term concern for this sector?
Yes, I suppose it is, if you consider that everyone's going to stay at home and never travel anywhere. As long as everyone's fine trading the crypto without mobile phones, because they're going to need rare earths and other commodities to manufacture them. As long as people don't mind, kind of walking everywhere because the car doesn't work and there's no replacement parts because they can't get the metal. No home extensions will be allowed, everybody, because you need to trade crypto now, because we can't buy the timbers, we can't buy the steels. No, we've got an amazing world. They can crypto themselves away. That's fine. Maybe it has as all these hot sectors do, they have an impact. But fundamentally, our world needs metal. Try and make a cup of tea without the kettle. It's just a practical reality that our world desperately needs metal. That for some strange reason, the authorities that be have not built the supply chain and the production of metal. They've not found the deposits across the world in the last 20 years. They haven't built the production plants to mine those deposits. We're seeing a dramatic expansion in the demand for metals, and there is simply not enough supply. And in that situation, all that happens is the price rises. As the price rises over a period of time, more supply comes in. But you can't switch on even a formally constructed, metals processing plant overnight. You certainly can't find the metals overnight. And although there will be measures taken in the coming years to speed up the overall process from initial exploration through to discovery through to production, by faster permits, environmental permits, operational permits, all that kind of thing, it will still take years and years to bring things on. I don't think in my life, I'm only 52, still a youngster, I don't think in my life I've ever seen an investment opportunity like we have in the junior natural resource space. Because the demand for commodities is immense and the supply is so weak. And the companies that find the deposits are the juniors. So there's going to be dramatic M&A activity around any junior that finds anything, or even any junior that has a good portfolio that has interesting projects within it. Look at power now. We've got strategic JV with Kavango in the Kalahari Copper Belt, where I had my big T3 discovery with Metal Tiger. That discovery's fed a few people for a few years, hasn't it? With the profits that have been made and all the rest. And we've that ground package, 4,500 or so square kilometres, absolutely dramatic. You look at the what we were able to do in the Victoria Goldfields in JV with Red Rock, where we got 2,334 square kilometres under application in some of the hottest gold territory in the world, and 848 square kilometres granted. These are sizable land holdings in significant places. Look at the Patterson region, First Development Resources, 700 square kilometres or so of ground, with major magnetic bullseye targets showing many, many similarities to the major Havieron discovery in the similar region. So, I think we're not only at the best time possible, I think we've been able to build, and we should not have been able to build it. Had my fellow juniors had their radar switched on, most of the stuff we've got, we wouldn't have. So, I'm very confident and buoyant. Am I frustrated at my market price? Hell yeah. I mean, I look at this and I just think, all this work since January, and look at where we are. But I know from experience that efficient markets are not in place all the time. We, as investors, we make our money by inefficient markets, and we lose our money by inefficient markets. So when the market prices are too low, they're inefficient. We buy then, we build our positions then, and then when they become, normalized again, the prices on the market, then we make a lot of money. We can also lose money if we start to buy things on the back of hype when the prices are too high. And that's what a lot of people do, and I've done it myself plenty of times in the past. We get caught up in the excitement, shares gone up 10 times and we start buying it like crazy. And then all of a sudden it's the market realizes it's overpriced, that one, and it brings it back down again. So I'm waffling on. I shouldn't do that, but I'm very excited by what we've been able to achieve so far and what our market offers.
Good. And as someone, again, for me who follows this space quite closely, the demand is clearly going to outstrip the supply. I mean, you talk about the green economy, you talk about electric vehicles. I talk to people companies who are mining for battery metals, and they're saying that manufacturers are approaching mines directly to partner with them to cut out any middleman to secure their supply. So I think it is just a matter of time, really. So has there been one final question there? Final question. Oh, here we go. Yes. What would Paul what would Paul value Power at this current time?
Yeah, we might have had this private discussion about this previously, Mark, but directors really need to stay away from this one, because if I say to you now that I think my share price is undervalued, then let's say in 3 months' time it's gone like a rocket Ronnie through the roof because everyone's got excited, and I'm looking at it thinking, oh, blimey, it's a bit peaky at the moment. And you ask me that same question, I've got a choice. I either lie or, I kind of tell the truth. And if I tell the truth and say, oh, I think it's overvalued at that point, no one's going to like me for that. It's difficult. The market is the market. It prices you, where it wants to price you. I think you have to, the best way I do it is I look at comparator companies. And you can take companies on the market, and I won't name them because I know them very well, and I don't want to upset them. But they're the management teams very well. You can take companies that operate in our country of operations, right, or our region of operations, listed in London, listed in Canada, listed in Australia, and we actually have in that country or that region a bigger package than they do, with arguably more potential than they have. Yet their market cap is about the same as ours at the moment. And we've got multiple of those things, 13 different projects, 3 continents and so on. And I look at that and say, okay, even if I was only 50% of their cap, and I was 50% of the other company's cap and 50% of the other company's cap, I would get to a much bigger valuation than we are today. So I think it's fair and reasonable to say that compared to our peers, which is what gets me out of trouble, I think we have a very, very, very modest valuation. My only sadness in this world, where I know the cyclical market affects the valuation of the companies, and I have to accept that, and I have to deal with that. My only sadness is, as a director, I cannot buy freely. And I think directors should be able to buy freely. I think there's very little risk, because if you do something as a director and you generate material value in the business, then why shouldn't you benefit from it? And I think it's great to be able to step on the market at any time and support the stock by saying, and show the investors out there that you're behind that share. And that's what I've done with Empower at any opportunity I sensibly could. We're kind of locked down most of the time because we're so active that it's difficult for us to find trading windows. I mean, it's genuinely difficult. It's not just we've got an announcement, going out tomorrow or 2 days later. It's that we're in possession of information that could well lead to a price-sensitive announcement. And the rules are very tight on this. And I've had some advice on this as well with regard to trading. It's not just what you know at the time. You've got to be careful, because if anyone criticizes you for insider dealing as a director of a public company, they're looking very often in the rearview mirror, looking at the transactions that you've done and what has actually happened in the business after you did those transactions. But I do wish I could buy more freely, because there are times when I'll buy a lot more if I could. I think there should be some controls when directors sell, in fairness, so that their money has to go into escrow in case they have been kind of a bit naughty and not been fully disclosing all news about their business. But I think on the buy side, it's a shame that I can't get more actively involved in the company.
Mm-hmm. Okay. Well, thank you very much, Paul Johnson, for your time this evening. I think, judging by the comments, people have enjoyed it. PJ's communication is so good on a weekly basis. Nice to have PJ speaking on this sort of platform. I'm very happy with my investment in POW. It's a waiting game. Paul is always good value. So there you go. And also, I've noticed a couple of comments. Maybe we could have this quarterly, an informal shareholder meeting, so to speak. And someone else asked, could we do this Q&A again after Christmas? So what do you think, Paul? Are you up for that?
Yeah, well, investors can do a Q&A anytime they like. On the market news announcements, there's my mobile phone number. And if you send me a message, and then I'll get back to you. Now, I do have like a lot of emails coming in. So if I do miss an email, then just send me a text, and I'll pick it up, and we can have a conversation. I think it's important to say that this is a risk business that we're all in, and I do this on Twitter, quite a bit, because I know it's a difficult market climate. If you put money into my company, whether you've done it in the past with financings or whether you do it on market, whether you engage in these IPOs that are coming up with regard to the financings that are done with regard to those third-party vehicles, we take that money seriously, okay? And I know there's a few kind of big investors out there that take big plays and big stakes, and for them 50,000 is fine, 100,000 is fine, whatever the figure is. But our market is made up predominantly of people who don't have that kind of capital to deploy, and are hoping by placing, whether it's 100 quid, 500 quid, £1,000 into an investment such as Power, that they can make a reasonable amount of money, and whether we're a stepping stone for you to then move that money after profit into something else and hopefully do the same again. We do take that money very seriously. We have a growing team. It's a young team. They are all papered up, as the Canadians would say. Our team members have options. You've seen from the announcements in the past that I've fought to get everyone a good option position. So they share. If our share price goes up, they make a good return. Where possible, I've got them all under EMI incentive schemes, so the tax protective schemes, so that if they make money, they don't have to pay a vast amount of tax out on it. So the team, apart from being extremely capable, extremely flexible, work extremely hard, they also share alongside investors upside. Now, there's some big targets on the latest batch of options with 3.25 pence option price, but the share price has to do 5p for 5 days, I think, for those options to be usable. So, we're all aligned. The quality of the work that's being done is beyond anything I've seen before in this business, and I've worked in quite a few resource companies. The portfolio is certainly the strongest. Every day we had a lunch meeting today with one of our advisors. We have a few meetings and discussions with advisors at the moment with the IPOs, and we were talking about the progress that we're making across a number of our project interests. And every day he's bringing another eye-opener for us on an opportunity that may develop into something bigger and better. So it's a very exciting time for us. I do know the market price, having fallen 50% since January, is very dispiriting, and it's possible that, and probable that many people, including myself sometimes, think there's something wrong with the business. And I've spoken to 5 or 6 people in the last 3 or 4 days, trying to get opinions about, is there anything we should be doing better? And I've taken the comments and queries tonight, in, and all the feedback that I get, because I do think, there's always a chance to improve your performance. But I think we are pretty close to being optimized as a business. The workflow is incredible. The output via RNS may have slowed a little bit, but we decided that there was no point putting out relentless RNS. We would summarize smaller pieces of news in the quarterly reports at the end of each quarter, and then we put out the major material news in between via full RNS, which is what we're doing. But our workflow hasn't slowed. So overall, without me going on too much, I do think we have a great proposition. I do think this is our quarter our proving ground. And one of you will smile when I say that, because they've been repeating it back to me. This quarter is our proving ground. You will see whether the conditions are good or bad if this business is going to work. And I'm sat mid-October, I can tell you I'm very confident that it will work. And hopefully you'll make an awful lot of money in the process. So I thank you all for your support and your engagement with the company. And I want to just reassure you again that we take none of that support, none of that money for granted. And we know you place a lot of faith and trust in us by investing in Power. So that's it from me, Mark. Thank you.
Okay, well, thank you everyone for joining this live Q&A this evening. That will wrap it up. And of course, Paul Johnson, the CEO of Power Metal Resources, thank you very much for your time this evening. And yes, that will wrap it up. Thank